Hello from the For the CME. This is Chris Robinson with your Traders Exclusive comment for today, Wednesday the 8th. We've got a USDA report out tomorrow. It's given us a good opportunity to get some positions on with potential good risk reward. What are we looking at in corn, wheat, and beans? And then I'll switch over and we'll talk about livestock very briefly. Corn, wheat, and beans, we've been backing off after about 10, 12 sessions ago. We made some good moves. We were at 7-8 month highs in corn. We were at 7-8 month high in wheat. We've moved lower since then in absence of any really bullish information. Tomorrow, we're going to get a fresh data dump from the USDA. It's going to tell us what's going on with worldwide supply and demand. So we could get some action off of that. We've been watching South America. We never got a weather issue in South America, so they've had a really good growing season down there by and large. So they're looking at large crops. Large crops means increased supply puts pressure on prices. So we'll see if there's any change in that tomorrow when we get, again, updated information from the USDA on the estimates. Technically, you've got to look at what's going on. I don't care if you're a trader, speculator, hedger. You really should educate yourself on charts. Basic charting knowledge is really something you should have in your bag or your quiver or whatever you want to call it in your weapons. Thing we like to look at from a longer term perspective are these longer day 200-day moving average, 100-day moving average. If you get yourself a chart and look at corn and beans, you'll notice how we've been hugging the 200-day average. That's something that a lot of traders look at. Doesn't matter if you're a bull or a bear, they're focused in on that. So I would say be aware of where the 200-day moving averages are, especially heading into tomorrow's report. That's number one. Number two, look at where we've come from the August lows in the grains. We're $1 higher than where we were soybeans. So people say, what's the downside risk? Well, there's probably 30 to 60 cents worth of downside risk if we start getting surprisingly bearish information. That's in soybeans. That's just based on what the charts are showing. You know, charts are basically, just a picture of what's happened in the past with price discovery. So when people say there's risk, all they're doing is looking at the chart saying, the old lows down here about $1 away. If we get some really bad news, maybe there's 30 to 60 cents worth of downside risk. Ditto for corn. Corn has had trouble maintaining a bid, even though we got to 8-month highs just last week. So we see this, even though the trend is higher, when we make new highs, we step back. And again, what are people watching? They're watching the weather and they're trying to guess where the next shoe will drop. The managed funds, with the Commitment to Traders report, which comes out every Friday, they show us that the speculative funds are long soybeans, about 150,000 contracts. They're long corn, about 50 to 60,000 contracts. And they're short wheat, about 40 to 50,000 contracts. So that's how they're going in. That's the bet they're making. We'll see what happens Thursday at 11 o'clock when the USDA report comes out. It gives you opportunity, though, because it's a defined point in time where everybody focuses in on new information. So it gives a trader or a speculator an opportunity moving forward. Switching over real quick to the cattle. After having a really good rally, we've come back and done some backfilling. We're kind of in a narrow trading range. We continue to see a disparity between the cash market and the futures market with cattle. We'll see if that extends. Typically, sooner or later, the cash and futures will converge. And that's what a lot of hedgers and speculators are looking towards. So when will that convergence come to be? Right now, there's still a big spread between cash and futures. So it's giving you an opportunity, though, to set some hedges or to take some speculative trades. So at the end of the day, that's what we're looking for. We're looking for opportunity. Tomorrow's report represents that. This is Chris Robinson. Have a great day. If you're looking for help, give me a call. Look me up on the web.